We spoke about the following. You like manufacturing?
Yeah.
You were bullish on the EV capex, and you were bullish on the energy transition, and some select consumer tech names, which
Yes.
you already have discussed, Paytm and Zomato. How are you betting on manufacturing? Is L&T the easiest way to bet on manufacturing?
No, Nikunj, I think, manufacturing is a very broad term. My sense is that the kind of sectors which led between 2003 to 2008, but with a couple of more sectors added in this cycle, like you mentioned, electric vehicles and that entire ecosystem, or energy transition and that entire ecosystem, right? Infrastructure which is being driven by the government at this point in time, whether it is railways, defense, etc. So manufacturing is a very broad theme. I mean, when you say EV, you don't have to necessarily go and directly buy an EV OEM. You could buy an ancillary which is supplying or which is very well positioned.
Have you
for
done that?
EV. We've done that. I mean, Sundaram Fasteners has, $400 million of orders for supplying EV.
You've been holding on to Sundram Fasteners for more than 10 years now, right?
Yes. And they've transitioned pretty well.
I was looking at data, the CAGR return in the last 20 years for Sundram Fasteners is 20%.
Yeah.
One of the most underappreciated stock where they're giving you 20% return without dilution. And
At all.
Yeah, and nothing really great, iconic about that business. But they keep on doing the same thing again and again, and they have this habit of getting it right.
I think they're a great manufacturing company. People forget that when you looked at the manufacturing icons in India, Sundaram Fasteners, stands out with all 17 plants having won the Deming Award, which is the highest quality award that you can think of. And they were largely a commercial vehicle fastener company. Today, that's just 20% of the business, right? They do fasteners for windmills, right? So that's, for me, an indirect way to play the energy transition. You may not buy the end equipment guy, but you're buying into somebody who's supplying into renewable energy. They're already supplying to EVs, they're already supplying to fasteners to the windmills, and they will do more in aerospace, etc. You have the same manufacturing skill sets, but you have far more opportunities to earn your revenue from. So I think a lot of those kind of plays have found our way into our, you look at the bearing companies, right? I mean, they also go in auto, but then they also go in railways and industrial. So you can play all three sectors by buying into one bearing company, right?